We are going to look at cryptocurrency and Bitcoin in terms of a currency to transact. Believe it or not, we've sold 17 cars, Bentleys and Rolls-Royces, with Bitcoin. Musk is driving so much of this market. It's fascinating. There's been a lot of news about digital currencies lately. Companies like Tesla, Square, and PayPal have been getting into cryptocurrencies in a big way, with big billion-dollar bets on Bitcoin specifically. Whether all this turns Bitcoin into a viable currency instead of a speculative investment or a store of value remains to be seen, but there's a growing number of governments around the world who aren't going to wait around. The Bank of England is looking into its own digital currency. Sweden's central bank is testing an e-krona, and emerging economies have introduced pilot programs. In 2020, about 60% of the world's 65 central banks surveyed said they were running experiments on CBDCs. That's up 18% compared to 2019. Advocates say digital money can make cross-border payments easier, promote financial inclusion, and improve payment system stability. But there are also serious risks. Surveillance and privacy issues could arise if the central bank is able to monitor every transaction. A central bank digital currency, CBDC, is a digital form of a country's currency operated by the central bank. Similar to cash, the central bank would issue its digital currency to allow people to make everyday transactions. Big-name investors and big-name companies are now pouring money into Bitcoin. It's adding mainstream credibility to the famously volatile digital currency. Citibank recently said Bitcoin could become the currency of choice for global trade. All of this is forcing the Fed to get more serious about the digital dollar. The US also faces pressure from competitors like China, which has been ahead in its own digital currency development. On February 4th, China's central bank also set up a joint venture with SWIFT, the global system for financial messaging and cross-border payments. Many governments, including the UK, Sweden, Hong Kong, Australia, and the US, are all exploring ways digital currency could work. The European Central Bank is working with the European Commission in experiments to consider the benefits of a digital euro. It will decide whether to launch the digital euro in mid-2021. Sweden, which has one of the lowest usage rates of cash, launched a pilot program for its digital currency, known as e-krona, in 2019. And in Hong Kong, an experiment using digital currency to settle cross-border transactions with Thailand is being expanded. Central bank digital currencies would operate just like the money you see when you check your bank accounts online. The digital dollars would be issued by the central bank and held directly in a citizen's digital wallet. Instead of printing physical money, the central bank would use electronic coins or notes. The digital wallet would be accessible through smartphones. Governments could also decide whether they want citizens to create direct accounts with central banks or operate the digital currency through existing financial institutions. China's digital yuan is not based on blockchain, the digital ledger technology underpinning cryptocurrencies like Bitcoin. Put simply, blockchain is a permanent record of transactions linked in order, forming a chain to act as a timeline or a ledger. In Bitcoin's case, it's purposely decentralized. Central bank digital currencies can be blockchain-based or not, depending on their design. China's digital yuan works very similarly to its existing commercial digital payments, like Alipay and WeChat Pay. Users download digital wallets on their phones where they can store their funds. This generates a QR code, which can be scanned by payment terminals and shops to pay for food and retail items, to promote financial inclusion, similar to the success of M-Pesa, Kenya's mobile payment service. Still, there is debate about how this would play out. There are also risks associated with central bank digital currencies. If we solely rely on digital currencies and there is a massive power outage or hack, it could jeopardize the entire system. Most central banks say that, if implemented, CBDCs will coexist with other forms of currency. However, there is a big concern that a central bank-issued digital currency could cause a bank run during economic instability. CBDCs give people another place to store money. These digital currencies would be considered extremely safe assets, since they would be held with institutions like the US Federal Reserve, which is not going out of business anytime soon. In times of economic uncertainty, people may be more likely to pull their funds from commercial banks and stockpile the safer digital currency stored at the Fed. This could make financial crises more unstable. Privacy is another major concern. depending on how digital currencies are designed. In August 2020, the Federal Reserve Bank of Boston announced a multi-year collaboration with MIT to research central bank digital currency. The research project aims to explore new and existing technologies to build and test a hypothetical digital currency platform. On February 24, 2021, Fed Chairman Jerome Powell announced that the U.S. Central Bank would engage with the public on the digital dollar this year. This is going to be the year in which we actively engage with the public. We have a functioning financial and banking system, and we need to be careful that the digital dollar does not undermine it. I think this will happen sooner than expected due to competition from China, the rapid growth of cryptocurrencies, and the ongoing pandemic. Ideas like universal basic income and stimulus payments are becoming a more regular feature of the economy,